Hello, hello, hello. Welcome to Al Stock Trades. My apologies. It said here 55 p.m. Don't know why it said that. But welcome to Al Stock Trades. In this video, we're going to go ahead and do an analysis regarding Clover Health. And we're going to go ahead and extend it upon yesterday's analysis and talk about United Healthcare and how I believe we are slowly bottoming out for Clover Health. All right. So definitely share this video here. And yeah, let's get started. So what I wanted to talk to you guys first, really, I'm just going to pick up the low-hanging fruit here, is yesterday we made the video, if you haven't watched it. In Figure 3, we talked about how the dollar index is breaking out of the downward trajectory channel, and we expect it to continue going higher. As you can see, it went higher today. This is live. This was yesterday's, and you can see that it's higher, and so we're going to monitor the 200-day on the dollar. But essentially, as the dollar becomes more stronger, remember how, like, it's like, for example, like Netflix, it's more expensive for them to sell Netflix at a USD cost because the dollar is so expensive. So it kind of makes our products very difficult to ask, to purchase. However, we do believe this is short-lived. We do believe the first half of 2024 will get a moderate increase, and then the second half will be met down. Will be met with a downward channel. Another thing I want to talk to you guys about is small caps. So if you don't recall, yesterday we went ahead and talked about how we are waiting for the RSI to reset downward. We're expecting this to be broken, our support line, as we gapped up. And that's exactly happening right now. We're slowly descending. Now the RSI is 42 instead of 45. Again, this is for small caps. And obviously, this is why Clover Health's down, and a lot of other small caps are down, even some mid caps, because of the overall direction of this ETF. Just like a very quick cheat sheet. It's not always like this, but it's, the general trend is when the price action is above the 50-day moving average. That usually is an indication that institutional investors are coming in, right? The institutional investors are dropping in. So potentially with this steep market decline, it's most likely following the 10-year treasury as that's increasing. So it kind of broke out. We're slowly fighting our first resistance line. And now we're looking into that second one to see if it, goes in and goes over that. But as you can see, it's all interrelated. So as the 10-year treasuries goes up, overall the stock market should go down. But we believe this will be short-lived because we think that the Federal Reserve is going to be cutting interest rates. But what I want to go ahead here and show you is, if you go to Clove, we can see that we are consolidating. Again, this data is really nasty, so we're going to go ahead and use our, again, for a technician, it's easier to just graph some lines here, but we're going to go ahead and use our AI planted resistance from our stock terminal to be better able to ascertain this. But what I find most intriguing is the IWM small caps Russell 2000 ETF. So as you can see, we have these support lines here, and you can lower the support line however you please, but this is just a nice one. And we do think that it is going to be supported by the 50-day, if not, at least by the 200-day. So we are expecting it to go down. Hopefully it'll be done recovering, but last time the RSI was this low, it was around this price point. So hopefully if the RSI can reset, it'll probably reset around this region here. If not, it's probably already done resetting, and we start going off to the races. We already know, if Wall Street wasn't able to get the hint in the first run up, they certainly are going to get the hint now. They're active, they're locked in, and they believe that. Many firms are going to be doubling down on small caps. So that's what we have for the small cap analysis. And then we're going to talk about United Healthcare regarding its increased medical cost. But overall, if you look at the Russell year to date, it's down 5.32% versus Clover year to date is down 1.68%. So you can see that when small caps rise, historically Clover Health rises about two to three times. Interestingly, when the small caps fall, Clover Health is not falling 2 to 3 times. So this is suggesting that we're getting to a point where we are bottoming out in Clover. And I'm going to show you right now resistance in lines, but just a very quick uh, um, extra splurge here. The S&P 500 is down 0.3%. So if we were to go ahead and open up our resistance line here and take a look at the hourly for Clover, and then go ahead and also take a look at the daily, we should get so here's the daily. Let's take a look at the hourly here. So overall, if we were to look at the day chart here, and these are all AI resistance graphs. This is for the day. As you can see, we're starting to form a channel here. Again, you know how messy it was on the actual technical analysis grid? It was too messy. So I really like this because it really cleans it out for you. So uh, we're starting to really show some support at the 92-cent region. And this is almost starting to become a bottom out phase where every time we break under 92 cents, we recover really quickly. Especially when we broke down the 78 cents here, it was a very quick recover and up to the upside. So I do see some consolidation here, and I highly doubt, or honestly would be surprised if we broke further down. So we are bottoming out in Clover Health, which is exactly what we need to see. And then here's the hourly chart, and you can see as soon as we go under the 95 cents and 92 cents, especially 86 cents here, we're met with a very fast with an hour's V-shaped recovery. You can see here, we just recover really quickly. So I do think the 92, 95 cent region could be the bottoming out factor for Clover. Anything below that will be met with an increased buy-in, as folks definitely like to trade these movements. Interestingly, I want to go ahead and I want to see the minute chart. Let's see. Let's look up the minute chart here, and you can see kind of these short-term fluctuations. A lot of these traders are coming in. They're like, oh, okay, well, once it touches here, I get in and I go in here and I buy, essentially buy here, sell out, buy here, sell out, buy here. So you can, take advantage of these 10% gains here, and you can compound them. Let's say you're able to capture 5% of them, 5, 10, 15, 20. So, you could really do some trading here, which is kind of what's been happening right now with the algorithms. It's just an easy trainable algorithm here. But I do believe that retail investors, at least some of them, have stopped selling. I mean, the people that are in right now are pretty much know about the company and are up to speed on the ACO exiting, the profitability that we're going to be soon seeing, the EBITDA profitability along with the free cash flow. If you want to talk about AMC here, it's interestingly, because that's another, sadly, Clove got bucked into the AMC meme stock category, but AMC, I feel like the apes, if you ever, whatever you want to call them, they are capitulating, meaning that they're giving up. Because if you go here and go to the 1 day, we can see a 4% decrease. In the 5 day, we see a 20% decrease. I mean, AMC has been dropping like a rock. A month, we're getting a 40% decrease. A 40% decrease in a month. I mean, this stock just keeps dropping. And I think it's going to get to its ultimate cash value reserves at the end of probably Q4 of 2024, which should be anywhere around $900 to $1 billion, which is why it's going to its cash reserves, because it's burning cash. And then in the 6 months, it's down 88%. And then in year to date, 33% versus the Russell's 5%. And then Clover is 1.76%. And then the year is 91%, 91.4%, 44. 5 years, 92%. And the max, it's down 94%. I mean, AMC is just down altogether, right? So we do believe a lot of these retail investors are capitulating, especially when it comes to these meme stocks here. And companies that are, fundamentalists, like they don't have great fundamentals, uh, are really getting hurt. Ultimately, we'll see and take a look at, the book value and whatever for AMC to see potentially this could be a good speculative trade. I mean, I wouldn't be surprised if this jumps, $4 to $8 on some news because, AMC investors get excited. But I'm gonna have to figure out why there was a decrease here. But overall, it seems as they're capitulating and giving up. I don't think there's any news on dilution. Uh, do I expect dilution? Of course, but I didn't think it happened for this price to drop like this. Um, interestingly, there's a guy who makes videos on um, AMC, and that's pretty much all he does. And I wanted to just go to the comment section. Funny part is his name is Al as well. And he makes videos on AMC, but he just made another video on some therapeutic bio, probably cash burning company. And the comments are actually really, really hilarious. I wouldn't, piss on the stock market if it was on fire. Again, these are all retail investors. I will never buy an individual stock ever again, let alone a pharma. These guys only care about AMC. But what this is, at least showing me is a lot of retail investors are pretty much the ones that are, 2020 bound. A lot of them, especially in the, stock market, that played with AMC, I think they're out of the market, and I think they're capitulating and they're giving up, which is why we're seeing this just dramatic, literally within 5 days, 20% loss. Honestly, I want to see how it looks like on the chart here. I think it's going to be rad. Yeah, it literally is going down to the dumps. Like this is just down. It's not even near the 200-day. This is just going to underperform. The RSI is really oversold, so it can potentially have a great rebounding effect. But overall, this thing just did a reverse stock split, and it just continues going down. Again, the fundamentals haven't changed, right? So I think what's going to happen, and this is just my kind of guess, is once Clover Health starts increasing, because we are expecting Clover Health is bottoming out, and not it's bottoming out also because of the fundamentals. We believe that now let's go and talk like the fundamental stuff. We do believe that the cash burn is going to start decreasing. They're going to become EBITDA profitable on a, I believe, non-GAAP basis. And they're going to become free cash flow positive, which means that they'll be able to sustain their business activity without any further share dilution. And the company pretty much got the hint that the stock market, because first they were kind of monitored and they've entered the stock market from a 2019 perspective, where a lot of unprofitable stocks were okay to be on the market because that's where you fundraise. But the market completely changed after the Federal Reserve increased their rate hikes. So now they're all about profitable growth, which is exactly what you need to do. So this is just a speculation, but I think it's kind of back to I think it's just my experience. So this is like non-data driven, just experience driven here. I think the folks that are in the AMC camp that have lost a lot of money, they're going to see Clover Health and they're going to see it bottoming out. And let me show you here, bottoming out and then increasing on the upside. And they're going to be like, what the hell? Citadel is doing this and all the other just psychological, just BS they're going to say. And they're going to be like, no, this is a trap. And then, Clover's going to continue rising. And they're so out of touch with reality that they probably think it's squeezing. So we are going to see a high beta, which just basically means that the stock is going to be very volatile. And we do think that attention is really going to be put on Clover. Andrew Toy is in a pretty peculiar situation. Being classified as a meme stock isn't really the best. It's not the best, and it's really been annoying because people have underwritten the company. But once they start turning into a profitable company and they're free cash flow positive and they start growing from a profitable perspective as seen, then they can use that meme stock box they've been placed in as like hey, this actually is a meme stock that is successful, which is what I've been saying for the past years, but for the past 2 years, I think. So and there's been a lot of opportunity. My average is so low now that I'm almost near my goal value of shares, and I'm pretty much happy at this point. So yeah, I think once this thing starts going, I do believe we're gonna see a lot of these AMCers and a lot of these folks really be like, what's going on? I thought Clover was X, Y, and Z. And then for all the people on Wall Street bets, they're going to go crazy. Like, what? This is actually a good company. Now, speaking about United Healthcare, if you look at the financials of their most recently released earnings, if you look at the medical cost, you could see the medical cost went from 53 billion to 62 billion, right? And again, these numbers are in millions here, right? So that's 53 to 62 billion. The medical cost pretty much increased by almost $10 billion, right? That's a big jump, guys, right? If you look at the operating cost, they went from 47 billion to 54 billion. That's a 7 billion increase, right? That's a lot. That's a lot. And if you were to look at the MCR, and I posted about this, the MCR, I believe was, and honestly, if you go to our Twitter page here, give me a moment. Let's go to our Twitter page. Let's go here. Let's go to our Twitter page and let's go to media. Yeah, here. So United Healthcare stock suffers biggest drop in 7 months as costs disappoint. We're going to make a separate video about this, but just wanted to point it out to you for folks that stayed this long. You are true supporters of this channel and true fighters for the truth and good equity independent research here. So the medical cost ratio rises more than 2%, 2 percentage points to 85%, well above expectations. Now you might think, oh, a higher number is good. No, again, this is costs. You don't want costs to go up, guys, right? So the incumbents and dinosaurs, the costs are going up, and people think 2%, not that bad. But if you actually look under the hood, this is like an approximate $10 billion of increase. That's a lot, right? That's pretty significant. While Clover Health dropped from an MCR at around 81 to 82%. I mean, obviously, that's a really significant drop. And United Healthcare said that the decreasing operating margins was also due to just the senior population being very difficult for outpatient care as they're very, very expensive. And United Healthcare has been really enjoying its healthy population to offset the seniors, versus Clover's just focused on senior population, and they're really, really focused on the sickest of patients. And they're able to drop MCR down to 80 and not have healthy patients to offset the sick patients. So what they're doing is, they're actually taking care of patients and causing an MCR going lower, and it's purely technology driven. So these are all bullish to me. You take them as you take them, but I think these are bullish, in my opinion. What else I want to say? Yeah. So I see a comment here. Let me go ahead here. So a lot of people waiting for CLOV 2023 Q4 report. Yeah. So honestly, I don't really care so much about Q4. I know they're going to lose money. I know free cash flow is going to be negative unless they pull a Houdini, but I'm like 95% sure they're going to be free cash flow negative. I think EPS is going to be on, earnings estimates are going to be right on point by a factor of 1 plus or minus 2 cents off. If they beat, that's great. But I'm more actually looking forward for the Q1 guidance. That's going to be where the money's at for me. But if I were to just speculate where I think the price would be for Clover, I think that after, excuse me, after 2020, like after 2024, like within this year, I don't think we're going to see Clover Health at under $1. I don't think this is going to happen. If it and if it still does, then I'm going to be very surprised, especially if they capitalize on their profitable, positive EBITDA, non-GAAP basis, free cash flow, positive uh, company standpoint, their financial standpoint here. So I think that these drops that we've been seeing are going to be a thing of the past. And once they become profitable, a lot of institutions are going to be like, "Oh, okay, this is pretty much easy money here," because the stock dropped so low next to book value that it's worth obviously more than its equivalent cash on cash basis, given all of its members and data it has. There is definitely value. So we'll be monitoring this. We're gonna continue doing our due diligence, but these are things that I'm looking at: the support and resistance line, the overall United Healthcare financials, and the overall general schematic of the stock market, of the Russell 2000, the dollar index, the 10-year federal note, and overall other meme stocks such as AMC, and seeing that a lot of retail investors have given up on AMC. Just seems like it with this drop. And I don't know how many pennies post split, but I think we're in the pennies of what AMC's trading at, which is crazy. So I think maybe AMC is trading at 30 pennies, 40 pennies. I think, correct me if I'm wrong, given all the splits, probably even more. Sorry, less. So I think we're going to see a once in a lifetime opportunity here. And yeah, that's I'm down with that. That's looks pretty good to me, guys. So if you like this video and like the due diligence, definitely smash that like button. And if you haven't done so, subscribe to our channel and take a look at what we offer in the links down below regarding our New Year's coupon code. We should be removing the coupon code, I believe, by the end of the month. So take advantage of that. And we wanted to extend it, given that we had a very successful campaign on Twitter. If you go to our Twitter homepage here, regarding our successful campaign, we had almost 1 million people view our stock terminal, and we had record-breaking successful enrollments into our stock terminal lifetime access. The only unfortunate part is a lot of folks that enrolled haven't gotten into the stock terminal, and I guess they just bought it to secure the holiday special, and I guess they're just going to come as they please. But for you guys that are watching that haven't accessed our stock terminal, take advantage of it, because it's you have all this data and our insights and stock picks and all these other amazing things. So I think they should be coming. We had a record enrollment, so very excited for this here. So yeah, folks, that's all I have for you guys, and I'll see you on the next one.